Yeah, I wrote these down because I'm like, what are the most common ones?
G'day, Paul from Small Crown Productions here, and welcome to the Business of Art. On this channel, I dig into all of the things that we need to help us build a business around our creative work. So tips, tools, strategies, interviews, mindset, whatever I can do to help share knowledge from people who know what they're talking about so that we can do business better and make money from our creative work. So if that is something you are interested in, please consider subscribing. This video is one in a series of over 15 videos relating to tax and finance for creative people in Australia. So this is specific to Australia. It is also general advice. Always, always, always seek specific advice about your situation in your region or country where you are. What I did was ask my creative network for a question that they would love to ask a tax and finance specialist, and then I bundled them all up and took them to Matt Tucker, the principal of Creative Crunches here in Brisbane. Creative Crunches is an arts-focused accountancy firm. They know what they're talking about when it comes to Australian tax law, tax and finance for creative people. Matt was super generous to donate his time. I cannot thank him enough for taking the time out of his day to actually sit and answer these questions for us all. So with that, let's dive in to today's question.
Keeping insufficient records is probably the biggest. Now, and that's a sleeper because you don't really know how much or little a client's truly doing unless they get picked up for audit, and then it all comes out in the woodwork. But we've seen those audits go pear-shaped where those records are not there. We have definitely tried to warn them against that outcome. You know, it's a slim chance that it happens, but it can happen. So keeping insufficient records, I would put up there only because I'm old now, and I know what keeping them is, you know, and I also know that for all our clients, this is actually the most boring aspect of their life. I get that. We know that. Probably wish at times it wasn't so boring, but it really is. It is the most boring aspect of what they do. So we get that. So it is easy for a client to just gloss over when accountants put all of this importance on this mystical audit that never seems to actually happen to them or anyone else in the industry. Maybe a fair comment, but I would say keeping insufficient records is probably quietly at the top. Claiming for expenses which are not deductible, or maybe just that they're partly deductible, and just trying to get away with claims for 100% of the cost where it really should be pared back a little bit with further substantiation as to why we're only claiming 50% or 20%. Moving bookkeeping practices into programs like MYOB and Xero without adequate training or advice on those programs. That is starting to be a bit of a freight train of an issue in this space, as all of those software providers just jostle for position. It used to be just MYOB in this country, and it was pretty much the only piece of software that existed. Now there's, you know, two probably very dominant players in MYOB and Xero. Everyone else is really periphery, to be honest, though those two companies have got the lion's share of the entire market. In amongst all of those other providers, there's software providers that are putting software out into the hands of people in purely online driven systems that are not even built with Australian GST as a kind of a background mechanism where, you know, it can't even handle it properly, but clients are using it because it's free. The one thing that I would say is that those pieces of software, well, some are better than others, absolutely. Like there are definitely platforms that we would steer clients away from and say it's just not worth that investment. And even if it's free, it's not worth us charging you to fix it. You know, you would be better off actually having invested in one of the major players and using a platform which is, you know, just common amongst all of the accountants in the country, not just for us, but if you move your affairs elsewhere, it's going to be a common platform that they get as well. While those programs are great pieces of software, and they generally get better each year, they're really complicated, and they're accounting programs, and they're built on a backbone of double entry bookkeeping and accounting principles, and all of that sort of best practice. The programs are not yet that great at being able to warn clients when they're doing something wrong. So it'll tell you something's reconciled when it's actually not. It'll let you process something in, one of a few different ways. And if you're going to process one part of the programming in one way, then the way that you process a payment has got to be this way, not this other way that we allow you to do. So there's not enough around some of those parameters where clients are just not recognizing that they're making errors, and the programs are not really telling them that they are making those errors either, until they get to an accountant that tears the file apart, and it's an ugly conversation. They're great pieces of software, but they need to be fully learnt. Even accountants need to learn them. It's software. Garbage in, garbage out.
Yeah.
Not being in the income averaging system when they're eligible for it. We see that all the time. Clients coming to us from self-preparing, or even with an agent that is not in the industry and is not aware that these provisions exist, or even cases where they're in that averaging system and they shouldn't be. So someone else's assessment of them being in it is, in our view, not right. And being able to warn them against that. Failing to register for GST if they've been over that threshold. Sometimes that might even be that they've gone and got themselves registered for GST when they may have had one of those outs because of their projected income, but they didn't know. So maybe now they're struggling with GST when they probably didn't even need to be registered at all. Getting the advice from the beginning is really important. So, not just getting that registration issue wrong, but failing to even properly account for GST once it's in play. We've got clients, again, that they'll be happily chugging along in their business without having to worry about GST. But as soon as GST registration comes in, you've now got to be building a system which can track that GST specifically across everything. And for some people, that's the first time at which they move from spreadsheets to accounting programs. They don't particularly want to, but with all of the extra complexity of GST just coming in as well, it's like they get to this position where maybe it's not just a GST question, but also an accounting software question as well. The final two I identified as probably setting up complex structures when they don't need to, or setting up a complex structure but not setting it up very well. We're very big on understanding that it's horses for courses, and while those companies and trusts can be great vehicles, and they've got their benefits, they've got their cons, and they've got their costs for running it. And over the years, there's been no shortage of clients that are, even with their eyes fully wide open, have gone into one of those complicated structures, but maybe 3 or 4 years down the track, we're having one of those conversations where they said, "Oh, you're really not joking about it being a costly thing to kind of keep running if the business is not really at this financial juncture which can really support it." And then we're having conversations on how to unwind it. And of course they can be unwound, but that's all going through all of the processes to unwind it as well. So structures are very important questions. It's about how you want that business set up for a much longer period of time, and whether or not the clients really are for it. We definitely see people coming into us with elaborate structures that we feel are just unnecessary.
When you say someone's got an elaborate structure, what are the sort of things that they've put in place that make that sort of a structure like that?
So it can be a sole trader having put their independent contracting into a corporate structure, but the bookkeeping is sloppy around it. They're taking out money which is not in the form of proper wages. They haven't placed themselves on payroll properly. They're not taking account of all of the underlying superannuation obligations that the company has. They're not withholding properly as a proper payroll employee, which it should be doing. Or if they're not on payroll, they're just ripping money out of the company and exposing themselves to Division 7A loan problems and not managing that either. Going and buying a car and just putting it in the company because the car yard has got some special deal on leasing interest, and the next thing you know, they've got a car in their company. and the car is basically just a private asset. They've got no interest in keeping a logbook, and now we've got the problem of the company providing this private vehicle to one of the directors. Fringe benefits tax all over that arrangement, and a very, very costly tax too. Fringe benefits at top marginal rate, 47%. You know, it's a very expensive privilege, but you know, there's lots of these misconceptions around, oh, just go and get a company, or yeah, you can set up a company, you can deduct everything, you can get a car in the company, you can deduct all of the costs, and it's not that. Yeah, it's a lot more complicated, and you could have bought the car, no problem. You still need to maintain the logbook. If you want to claim for all of this business use, that is the same in a company, or it doesn't change no matter what structure. But at least in an individual setting, if you've got all that private use, the ATO isn't coming at you to say you owe fringe benefits tax on yourself. You can look at some of these cases and just say, why aren't you just still a sole trader?
There we go. Thanks again to Matt Tucker from Creative Crunches for taking the time to answer these questions. If you have a tax and finance question of your own that you would like to ask, please pop it in the comments below and I will do everything I can to get that answered, or link you to one of the other videos where it may already have been asked and answered. Also in the description below is a link to the playlist that contains all of these tax and finance questions, so you can dig through there and see if your question has already been answered. And of course, it would be fantastic if you could like this video, subscribe to the channel, but most importantly, if you got something of value out of this, there is a good chance you will know somebody else who can as well. Please share it with them, tag them in the comments, whatever you've got to do, pay it forward so that we can keep helping each other out. Thanks very much. I'll see you on the next one.